So far throughout last week, I was talking about my analysis on US dollar and euro as well. And we also had a limit order on the trade idea on euro US dollar. And one of the reasons for that was because of my analysis on the US dollar. Because looking from the 12-month time frame, I've always stated my analysis on US dollar still being within this bearish range high and low. And anything can happen from this key level, and we could see a down move on the US dollar. And so far, after price mitigated this key level right here, breaking this low, this 4-hour low right here. If we're bearish, I would like to see a continuous move to the downside. In as much as price mitigated this daily inefficiency, which could also be another reason for us to continue higher. But don't forget, we mitigated the gap, and this gap is on the daily time frame, which has a very significant effect in the marketplace. And as you can see previously, price mitigated the gap right here. After that, we saw an expansion. That is to show you how volatile price can be after mitigating a gap. So that being said, if we go to Euro US dollar to look at Euro US dollar, the trade idea that was posted as well, you can see this right here was the entry. This was the entry on Euro US dollar. You can see how price mitigated this position, and after that, we saw an expansion. So I was anticipating for this to really go higher, but because we had a high impact news this morning, so if you check on your forex factory, we had a high impact news this morning by 8:15, and this tends to affect the slippage. So when there is a high impact news like this, it can either widen the slippage or shorten the slippage. One of the other usually happens. So sometimes things like this can actually affect our trading, and it can make us not get activated in the market as well, because you can see right there, after price mitigated the entry, it just expanded, and then we saw the news, and then we just saw this explosion. So but we're watching this very closely. I'm still watching it to see for a potential re-entry into the market, because I'm still very much bullish on euro US dollar, and hopefully if we do get that re-entry confirmation, we're still going to get in for buy. So my analysis remains to the upside on euro US dollar. I still want to see it continue higher. So the reason for closing the trade right here, in as much as I am anticipating for it to really rally to the upside, is because of the high impact news. Anything can happen with the high impact news, because the high impact news could take us to the upside to run buy side liquidity, only for it to reverse to run sell side liquidity. So we wouldn't want a situation where we got triggered in and we're in profit, and then after the news we were in more profit and we just held on to everything, and then it reversed and wiped us out in a loss. So it's better we take what we've made, and then we use that to wait for a re-entry, and if we do see a beautiful re-entry, we can get back in again to make more profit. So that's how we play the game of trading. There's no certainty in the market, it's all probability, and that's just how it is in the market. So another thing, like I always say, when we post a trade and we put an entry, for example 6242, let's say for example the entry is 1.06242, always add an extra 1 to 3 pips to it. So the reason for that is due to slippage. I don't know what broker you're using, and the brokers, their numbers are not the same, so it can activate me and also not activate you. You can see basically right here, this got activated, it taps the entry. But another broker, we can check another broker right now, and you see another broker, it may not even activate another broker. So let's look at another broker. So you can see this broker, if you were using this broker, you wouldn't have been activated. But if you were using this other broker, you would have been activated. So it just happens in trading. There's not really anything we can do about it. It's just making sure you add that extra 1 to 3 pips. So you can add an extra 1 pip or 2 or 3. At least add 1 to 3 pips. That's basically what I do in my own accounts. When I see a setup, this is what I'm watching. I add that 3 pips, and then I also have a re-entry. I have a second entry. I usually have first entry, second entry, and third entry. So in this one, this right here was my first entry. This green line is my second entry. This orange line is my third entry. So if price should come in and mitigate the three of them, I'm in all trades. But in this case, only one got activated. So we just take what we've got and we'll run with it. So that being said, I'm still very much bullish on Euro US dollar. We still have a very long way to go on Euro US dollar. So that's why no need to panic, no need to be worked up. You missed the trade, because as long as we still remain bullish on Euro US dollar, we have a very long way to go to the upside. So all we'll be looking forward to see is expansion, break of structure, retest. We get in again, another expansion, break of structure, retest. We get it again until we run above all these buy side liquidities, because I'm very, very bullish on Euro US dollar. And because if we look at the 12-month time frame, you can basically see that the overall market structure has been bullish, creating higher highs and higher low and higher high. So right here, I believe this is most likely going to be a higher low, and then potentially us creating a higher high. But this is going to take a very long time. You can also see right here, low resistance liquidity. And another thing to put into perspective is the fact that anytime we want to be bullish, we are very bullish. You can see right here, we used just three candles to break and create an all-time high. Three candles. 12-month candles. So this right here means that when in that year they had 3 years of bullishness, massive bullishness. And then right here as well, you can see they also had 3 years of massive bullishness. This right here was in 1985, from 1985 to 1987. And this right here was from 2004 to, this was from 2004, this was from 2002 to 2004. We had up move, just the price going towards one direction to the upside, expansion to the upside. I want to see something similar to that right here. That is what I want to see. I want to see the next 12-month candle bullish and the next 12-month candle bullish. I want to see at least two 12-month candles showing me massive bullishness in order to gravitate to the upside, potentially mitigate this low resistance liquidity inefficiency, and most likely this low resistance liquidity restaurant right here. You can see how low resistance liquidity is always working out so perfectly. You can see we have a low resistance liquidity right here. You can see we have it right here, and you can see how price smashed through it. And we now have it right here as well. You can see that very nicely. Low resistance liquidity, we'll still have it right here. So I'm anticipating to see that expansion to gravitate above the low resistance liquidity. So that being said, we're going to look at other pairs as well, because I'm also looking for a trade entry on gold. I still remain bullish on gold. It doesn't really matter what the market is doing right now. My bullishness on gold remains unchanged. First reason, I'm going to share with you as well my analysis. So you can see we have this weekly inefficiency resting right here. You can see how nicely price came into it, mitigated it. The next thing I'm looking forward to see, I'm scaling down to daily time frame. I'm scaling down to daily time frame, and as you can see on daily time frame, you can see that right there. We have this last down close candle, took liquidity, expanded higher. Go to the 4-hour time frame because we want to see this very clearly. And on the 4-hour time frame, we have this down push, expanded higher. We have inefficiency resting right here, aligning with the weekly inefficiency as well. I'm gonna make this a different color so we can differentiate the weekly and the 4-hour inefficiency. So right there is the 4-hour inefficiency. So we'll go to the 1-hour time frame. So on the 1-hour time frame, now we're looking at the structure. On the structural basis, we can see price created a low, a high, created a low, and then we saw this break of structure. And right here, this is the break of structure. This right here is the break of structure. But if I wanted to buy this, if I was looking for to buy gold, the best possible place for me to buy it would be from here, this bodies of the candle. So it's not really very evident right here on this time frame. So I'm going to use bar replace so we can just focus on this. So we'll go to 30 minutes time frame. And on the 30 minutes time frame, this right here is my point of interest. I'm going to make it a different color so we can see it very clearly. And right here, this red box is my key level. So if I see price mitigate this key level, all I'm going to be looking for is a 4 minutes break of structure. So I want to see a 4 minutes break of structure from this key level. Once price mitigates this key level, I want to see a 4 minutes break of structure. So we're going to go back to current price action to see if that key level has been mitigated. So right here, I draw it over. And as you can see very beautifully, price mitigated that position. So the next thing we're going to be looking for now is for a 4 minutes break of structure from this key level. And as you can see, there's no 4 minutes break of structure yet. The only high on the 4 minutes time frame we have is this, and we have this low. So what do we do right now? This is the most important time. We wait, and what we're waiting for is to see either the high or the low to get violated. So we want to see either price is going to rally to break above the high. This is what I mean. Break this high, confirm a 4 minutes break of structure, or drop below, run this low one last time, and then break above the newly created high, which most likely will be this one. So let's say this is the high, and then we create a low. All I want to see would be for a break above this high, and then I'll be looking forward for a retest to get in a continuation to the upside. So this is what I'm watching on gold, and I'm just going to be patient to see what price is going to do, whether it's going to take the low or the high. But most likely, if I was to pick a side, I most preferably wanted to take the low one last time, because taking this high is going to reduce the risk to reward of the trade. But if it takes the low, it's going to increase the risk to reward of the trade. So eventually, if we break above the high, the risk to reward would be higher, because this is much lower. If we can break below this low and then break above this high, that would be incredible, beautiful. So that is what I'm watching on gold. I still remain bullish. My overall target on gold is to the upside. Low resistance liquidity resting above the highs. That's going to be my target. So if I eventually get it on this trade, I'll be targeting for price to take this high, creating another all-time high. That is my analysis. If you do have any questions, feel free to drop it in the chat. So we're going to look at GBP/JPY because I'm watching that as well. So for GBP/JPY, there's not really much for me to work with right here on GBP/JPY. I still want to see price come into this position, and if we don't come into this position, I'm just going to be on the sidelines. But if we do come in here, I'll be waiting for a 15-minute shift to market structure. And then if I do eventually see that, I'll look for buys to continue higher. So that is my analysis on British pound, Japanese yen. So let's look at AUD US dollar. So I'm very bullish on AUD US dollar, very, very bullish on AUD US dollar, irrespective of the fact that it's been going lower for quite some time now. But as you can see, so far price came to the downside. I wanted to see a 15-minute shift to market structure, and right there after it's run through this blue line, which was my point of interest. Why is it a point of interest? Because that is the 4-hour inefficiency resting right there. So after we mitigated it right there, as you can see, clear as day, 15 minutes, high, low, break of structure, last down close candle, price came back into it, mitigated it, and then expanded high. So this would have been a perfect area for accumulation. And yesterday I was looking at this to see if I could get a re-entry. It gave me a beautiful re-entry, but for some reason I didn't get it. But that's the thing with trading. Sometimes you don't get into a beautiful trade and you miss out on it. So this was the trade, this was the entry. And you can see the date right there, Monday. It was yesterday. I marked it up, but I didn't get it on it because it was a very small time frame, 2 minutes time frame. I was waiting to see for a 2 minutes break of structure right here. and then use the borders of the candle as entry. So eventually price did exactly that, and it's up 1:5 risk to reward. So if you were risking 1%, you would have made 5% profit off that. So what I'm going to do now is I'm going to do another reanalysis on AUD US dollar to really figure out all the key levels to wait for price to potentially come into for re-entries into the marketplace. So right here on the 4-hour time frame, so right here we have a break of structure. So right here we'll have a break of structure. The next thing I'm going to do is scale down to this lower time frame to see the key levels to work with. And this right here is my last down close candle before expansion that broke that structure. So I'm going to outline that key level. So this is going to be my point of interest now. So all I want to see from this key level is for a 15-minute shift to market structure. So right there, 15 minutes break of structure. As you can see, price came back into it, mitigated it. There hasn't been any 15-minute shift to market structure. We'll have a high, we'll have a low, and then this week's up. So what we do, we mark this zone, we'll mark this high, and we mark this low. So we're going to enter this trade. I'm going to enter this trade and also share it with every one of you. So this is the key levels. So I'll be watching the low and the high. If the high gets broken, I'll wait for a retest to get in. And if the low gets broken, I'll be looking for another high and a low to get broken and then look for a buy. So that is what I'm watching on AUD US dollar. Take notes, we'll have CPI news on the AUD by tomorrow. Tomorrow, you can see that right there, 2:30 a.m. AUD CPI. So it's going to be very volatile tomorrow, and this is actually midnight tonight. So just be aware of that. I'm going to be watching it, and most likely I might still check it out tonight by 12, 1 or 2 a.m. to see what price is doing. So if I'm going to post any trade, it might be at odd hours. So just know that could come at very odd hours. So because I'm going to be working with what I see, if I do see a shift in market structure, probably by 10 p.m. or 1 a.m., I'm just going to share with the members. So if you're awake by then, you can take it. If you're not, that's fine. So more trades. Trading is endless. It's been here before I was born. It's going to be here even when I'm no longer here. So there's no rush and there's no need to FOMO. One of the key criteria, key skills to have as a trader is patience. You're going to miss trades. You're going to get into trades at the wrong entry. You're going to take losses. But at the end of the day, if you stick to it, keep on going, you're going to make profit. So that being said, if you do have any questions based off my analysis, my thought process, feel free to drop your questions on the charts. So another one I'm looking at is USD card. So I'm very bearish on USD card. So I was watching this 4-hour low, and I really was rooting for this 4-hour low to get violated. And eventually it did get violated. So price came into it a lot of time. So you can see basically we came into it the first time. I didn't like this because I wanted to see a candle closure. Came down below it again. I didn't like this because there wasn't a candle closure. It came down it again. I didn't like this because there wasn't a candle closure. It came down below it again. I still didn't like it because there wasn't a candle closure. But finally, we had this expansion, run on liquidity, and then price dropped, closing below it. So this was perfect. Perfect. So all I'm waiting for right now on USD card is for a retracement to the upside. I'm not going to place a limit order on this. I'm not placing any limit order. The reason is because, as you can see on the daily, this is still bullish on the intraday levels, and price could potentially mitigate maybe an inefficiency and continue higher to run the buy side liquidity, because right here we have low resistance liquidity. So I'm not going to place a limit order right here, irrespective of the fact you can see I've already put this on my chart. The only reason I do this is so that once price taps my key level, I know what I'm looking for, which is a sell, because I'm looking at so many pairs, and my brain is just one person's brain. And sometimes we traders, we do forget things as well. You can be looking for a sell right here, but if you don't mark it out and put what you want to look for when it comes there, and the alerts right there, you're most likely going to forget about it because you're focusing on something else. So that is why most times you see my chart all set up like I'm going to take the trade. I'm not taking the trade, I'm just putting it there to remind myself what I'm looking for when price comes to that key level. So right here, what I'm looking for is a sell. So if we do come back in there, I'm not going to just put a limit order. I'm going to be waiting for a shift in market structure. You can see right there how I also outlined it right there with for 4 minute shift in market structure. So the first one was in as much as I would have entered this trade earlier on, but I didn't really want to enter it because we were very bullish and I wanted to see a significant break of structure. So the first thing I was looking at to see was this right here. So this was the 30 minutes low and it got broken, and this right here is my key level. I wanted to see a retest, and if we retest it, I want to see a 4 minutes break of structure from that key level. And you can see very nicely we created a low, created a high, drop down, failed to break structure, rally, drop down, broke structure. So right there is the break of structure. So we came back in. This is a very beautiful entry for the trade. This right here, beautiful entry, stop loss above this high. I didn't get into this trade, but I'm just showing it to you, and then we're also going to look at what I'm expecting to see. So if you did get into the trade, you would have been up like almost 1:5, but it's not really too late to still get into the trade because now we have a confirmed break of structure, and this right here was our last move to the upside. So I'm going to remove this. This was the last move to the upside. I'm going to outline that from here. So all I want to see in here is a 15-minute shift to market structure, and then I'm going to sell. So we start to scale down. So we scale down. This low was violated by this impulse move, dropped, broke it. So let's look at 2 hours time frame. This was the impulse, drop lower. Let's look at 4 hours. Let's look at 3 hours. The reason I go through time frames is because I really like being specific about what I'm looking forward to see. And right here, there isn't really so much to see, but if we go to the 1 hour, let's look at 30 minutes. 30 minutes low. So this was the last impulse move before dropping, breaking this structure. So the only thing I'm going to do is this entire zone is going to be my point of interest. So once price is in here, I'll just be on the 15 minutes time frame. Once we're in there and I see a break of structure on 15 minutes time frame, I'll take a sell. And right there will be my sell. Right here will be my stop loss. I'll add an extra 1 or 2 pips or 3 pips to the stop loss, and that will be my trade. And I'll be taking it to the downside. So that is what I'm watching on. That is what I'm going to be watching on USD card. So hopefully another key level to also put into perspective is this line right here. This is the weekly open. Price can still want to come into that weekly open. That could still be another key level. Price could want to retest one last time before dropping lower. So just take note of that. But I'm going to be watching as well anyway. So this is what I'm looking forward to see on USD card. Hopefully that trade plays out and we can make some money off that position. So I appreciate you all for tuning in today. If you do have any questions, like I always say, feel free to drop it in the chat. I'll talk to you all in the next live stream. Have an amazing day, everyone.